Good morning, everybody. How's everyone doing? Wednesday, May 24th, brand new trading day. Hopefully you had a good evening yesterday. Hopefully you had a fantastic morning thus far. It's going to be a good one. It's going to be a good one today. The markets they're at key levels. Markets are at key levels, and they're actually moving quite well. I mean, the levels are being respected quite well out there in the market. And the key question for this morning is kind of like, do we find higher lows or do we fall back down into kangaroo land? And there's really two ways of thinking about this. I'll, of course, expand on my thoughts here as we get deeper into the ES analysis this morning. But line of thought number one would be like, okay, we find ourselves a higher low, trends are preserved, and we're kind of looking for continuation, of course, in the upward direction. And then school of thought number two is if this does turn into a rejection back down into the kangaroo land, then because this represents a massive failed break in the upward direction, I would have to assume that there's likely going to be a more severe downside move with trapped longs at the highs of this breakout, right? So I'm not really concerned one way or another with what the market does at these key levels. I think I think there's enough juice, there's enough positions, there's enough oomph in this market to do something either way at the key level. So anyhow, that'll be a topic of discussion for today. Good morning, everybody. Nice to see you all. Again, hopefully you had a fantastic evening yesterday. Hopefully you had some good trades yesterday. The market breakdown came from some pretty decent levels. So good morning. Scrolling up to the top, I just see our usual suspects. We've got Michael Cobble, John Cardozo. We've got Mickey, of course, David Ball, Victor Y. Katie Baby's here. Trade the Market is here. Roger Tutt, Davey Day Trader, G Hun. We've got Jay Hicks. Paul is in the building. We've got Sammy Sams, INF the Based Homie, of course, Jeep for Life, Pete and Repeat, some classic names there. New to Stock, El Lobo, Stevie J, Cipriano, John Taylor, Rose. Who else is here? DP, Rebecca F. We've got Nick Farrell, Black Diamond, Gregory Rulo. The usual suspects are in the building. Sharon J, I see you as well. So let's go ahead and get started. Dave does the wave. I see you. Good morning to you as well. Let's get started here with the economic calendar. What's going on with the data? You'll notice that at 10:05, again, not at 10 o'clock, couldn't make it easy, but 10:05, Yellen starts speaking. I believe there were some snippets of her speaking yesterday or from some time frame where she was talking about when the U.S. would run out of money if we do default on the debt, and it could be as early as like mid-June, which sounds terrifying, but we'll see what happens. We will see what happens. You know, if bad things start to happen, then, you know, we will comport ourselves accordingly. So that's 10:05. Expect some volatility around that. And as she continues to speak, I'm not sure that it's just going to be a one-and-done blip of volatility at 10:05. Just carry forward that there will be some uncertainty in the market after the 10 o'clock time frame. 2 o'clock ushers in FOMC meeting minutes. Just remember that this is not Jerome Powell actually speaking as a press conference. It's just a release of data that we already know. It's a release of data that we already know, unless there's been some switcheroos going on behind closed doors with the wording of the meeting minutes. The market should be pretty familiar with what's going to happen at 2 p.m. Again, expect perhaps a blip of volatility, but I wouldn't treat it as an end-all be-all for markets. The more important stuff here starts unfolding as we get deeper into, I wouldn't even say, like, sure, preliminary GDP and unemployment will be important on Thursday, 8:30, but we've been talking about this. We've been eyeing it for quite some time. Core PCE rolling around on Friday at 8:30. That'll be the doozy. And as I'm speaking to you here, I'm actually realizing that we will not have a stream on Friday. There will be no stream on Friday. I am traveling for the long weekend. Lots of travel these days. I'll be in a plane somewhere above the U.S. going to some destination on Friday. The flight is at 7 o'clock, so there's just no shot, no chance whatsoever for a stream on Friday. I'll be in the sky somewhere, all right? So unfortunately, I will not be able to cover that live with you, but I am bringing the mobile command station once again, and I will do my full, weekend video. Remember that Monday will be a holiday as well. We're going into a holiday weekend, right? So just keep your wits about you on Friday at 8:30. I'll try to maybe check in the Discord. I'm sure someone in the Discord will post the 3 questions and keep us in alignment there, okay? So that is Friday, 8:30. just be prepared for that. Let's move along and look at some stock-specific headlines here this morning. What's going on with our top-line figures? Mixed bag here. Not really. Oil's the only thing that's green, up 1.5% roughly. Everything else is mildly red, coming in about 1/3 of a percentage point in the downward direction, which, it kind of makes sense off that rejection we were talking about in the double top neckline break we were talking about in yesterday's stream, right? So we'll get into those levels in just a moment. The big headline here is about Kohl's. Shares spike as the retailer reports a surprise profit. There are some big retailers reporting earnings, but we know that the big one today after the close is none other than NVIDIA, NVDA, NVIDIA. I believe it's NVIDIA, right? So NVIDIA after the close will be important. That'll impact, obviously, all of the semis. That's going to boil down to things like, MU, TSM, Qualcomm, Applied Materials might even move ahead of their earnings based on the demand for chips, right? So it's going to be a widespread move on NVIDIA. You probably, just be mindful of that if you have any exposure to tech names into the close today. We'll talk about the earnings calendar. But anyways, Kohl's gets the big headline this morning. Futures slip as investors eye the debt ceiling clash in Washington. We've been talking about that. Obviously, it continues to be an issue. Yellen should be describing some of those issues in her, would you call it a press conference today, her speech? I don't know if I would call it a speech, but her talk. Mortgage demand drops again as rates cross back over 7%. Rates are getting volatile. We'll see that in the TNX perhaps. Password sharing crackdown in the U.S. can lead to big gains for Netflix, so an upgrade from Oppenheimer, giving Netflix an upgrade here on the heels of that massive move it made last Thursday. So congrats, Oppenheimer. Hopefully you had it ahead of time. Target pulls some pride stuff. Okay, so Target, trying to protect their it seems like they're trying to protect their employees. So I don't care how you feel one way or another about the collection items, but they're doing what's best for their employees, apparently. More password crackdowns from Netflix. Virgin Orbit shuts down after bankruptcy sales, right? So we knew that they were in the gutter anyhow. It was just a matter of time. So that one's out the door. What else is going on here? Stock-specific stuff. We're looking at AI-driven rally in big tech, forcing us to reconsider some trimming. As in take some off the table. You made some decent coin on this rally. Take some off the table. So there's that. What else is going on here? Some political stuff. U.S. banks, Citizen banks fined for mismanaging fraud complaints. What else is going on here? Strong storm over Guam. Best if anyone's got family there. There's a pro article here, but Jefferies giving an upgrade to a regional bank stock. So you could just watch the KRE and see if the KRE ultimately rebounds, maybe it leads to a stronger move out of the banking sector, specifically regional banks, but wouldn't touch it with a 10-foot pole yet. What else is going on here? We know that Big Ben, got some jokes in the other day on his conference with Powell. What else? Anything stock-specific? Microsoft says that Bing can be the default search engine for ChatGPT users. Okay, they got to keep competing with Bard from Google. Musk says that his days are long and complicated, splitting time between SpaceX, Tesla, and Twitter. I'm sure. I'm absolutely sure. Sherwin-Williams, if the image is truly correct, Sherwin-Williams from Jefferies getting an upgrade, 20%. Okay, so nothing crazy out there in the headlines this morning. I would say the best thing is really just understanding the volatility around the debt ceiling, right? Volatility around the debt ceiling is going to continue to be an issue for markets, and Yellen speaking today will likely exacerbate some of those concerns. Here is the earnings calendar. As we know, yesterday, where is it? Where's Kohl's? Oh, it was Kohl's before the open. Okay. Kohl's before the open made the big headline, and after the close, it's all eyes on NVIDIA. NVIDIA chip making, that'll be the big stuff. Snowflake and Splunk in terms of cloud computing. And then we'll get some retailers here and here. On the Thursday session, Costco will be the bigger one to watch. Okay, COST is the ticker, but NVIDIA. All eyes on NVIDIA. After the close, how many times will they mention AI in their earnings call? There should be an over-under. All right, I don't know. Chat, let's just make something up together here right now, and then we'll check in tomorrow because we will be live on the stream tomorrow morning. But NVIDIA, how many times do they say AI in the press conference from the earnings call? Here we go. If you think it's going to be over Let's go. If it's over 15, let's see a number 1 in the chat. Let's see a number 1 in the chat if it's over 15. If it's under 10, I know, over under usually uses the same number, but let's just say under 10. Let's see a number 2 in the chat. All right, so if you think they're going to be reserved and not beat it to death, under 10, let's see a 2. If it's over 15, let's see a 1. The over should start at 20. Is 20 more appropriate? I don't know. I didn't listen into their last call, but this one just seems like seems comical. Why not? Why would we not, think of this? All right. So, I'll probably put out an official poll on my Twitter. I'll put an official poll out there on Twitter, and you guys can participate that way if you'd prefer. And that would just be a fun way to track the results. But the Twitter handle is at Trade Brigade. I'm not going to spell the full thing out. TradeBrigade.co, or excuse me, there is no dot in the handle. Trade Brigade Co. And there is no underscore at the end. There is no underscore at the end. Someone brought it to my attention. There's one spam account out there of Trade Brigade, and they have an underscore at the end of the account. That is a scammer. Do not fall victim to scams, okay? So anyhow, there's the over-under, 15 or 10, over or under, 1 or 2 in the chat, all right? John Cardozo says another company pumped it out like 18 times. Yeah, okay, so I think we're in the ballpark, right? If they're gonna be reserved, I think 10 and keeping it on the DL is reasonable. If it's gonna be like pumped out mass AI this, AI that, AI, then I think 15 or above is reasonable. Anyways, let's continue along here. Let's do what we do best, which of course is jumping on over to our platform here and putting on our beautiful upper banner. There we are. And let's get jumping into the ES. Let's see what's going on here. Obviously, there's a bit of a slide taking place. Not only yesterday's session, we fell underneath the double top neckline. We'll talk about that on the hourly. But right now on the 4-hour chart, some concerning things are starting to unfold with the intended open or implied open being underneath and inside of this balance area right here. We also are going to pair this with the fact, so marry up 2 and 2 in your head. This is 1 and 1, but in your head, use 2 and 2. Marry up 1 and 1, 2 and 2 with the bad breath indications we've been sort of talking about in the midweek market update, the weekly watchers video from Saturdays. Bad breath, market breath is horrendous right now. It's just a really broad-based rally in the big tech cohort, really driven by AI, right? So put 2 and 2 together and it's like, okay, we broke key structure. It was worth at least reasoning for a possible higher low here, but this open inside of the balance range right now, you got to think to yourself, okay, it's do or die. It's do or die for the ES. It's got to find a higher low and get back out of this area here. Otherwise, a lower high here, and now all of a sudden we're back in kangaroo land, but after the context of a failed breakout. So I would have to imagine that stronger downside outcomes could be likely if we do ultimately reject this 4160. We'll talk about that number as we move through the time frames, but I do just want to talk about some downside targets. Let's just say that today is Armageddon. Janet Yellen comes out and says, you know what? The U.S. is going to default on its debt tomorrow. That's it. It's game over. Checkmate. How are you? What are some downside targets? Obviously, this is just a gravity point. This is not, I would not treat this level right here as a big area of support. That's going to be around your 4130 zone. 4130 is a gravity point. It's not an area of support. The area of support is really just the top of the gap, and we know this from these two moves right here. The top of the gap, just as a reminder, is 4111, 4111.50, if you want to be precise, 4111.50. Now, please, I know it's early in the stream. I don't want anybody to misunderstand what I'm saying. I am not implying that Janet Yellen will come out and she will say it's going to be Armageddon, and I'm not implying that you should think we're going here today. I just want you to know where the numbers are so you are prepared if we start to see a huge, downdraft out of the markets based on some fundamental talks, okay? So once again, the number, 4111.50 is the number. 4111.50 starts the gap closes, and we do have prior range support here at, the magic number will be 4097.50. 4097.50. Okay, so just have these levels on your chart. When we're trading up here, it's not really what we're thinking about. We're thinking about, okay, pull back to this, and now we'll look for continuation. As we break underneath that and remain underneath it in the pre-market, you need to be prepared with some deeper downside levels. Once again, not calling that we must go here. You just need to know where the support is. Gravity point, 41.30. Top of the gap, 41.1150. Closure, 40.97. 40.97. Okay, so those are the bigger numbers that you need to have on the chart. Obviously, the neckline has not changed. That's up there at 4,200. Let's move on down to an hourly time frame chart. Let's also, actually, before we go to the hourly, let's be very clear also that we are technically in lows, higher lows. There's an opportunity for very nuanced higher lows. Is it pretty underneath 4160? Absolutely not. But is it still on the table after a set of higher highs? The answer has to be yes. So the 4-hour trend has not flipped yet into a downtrend. It would really require a lower high and then an equal low being produced here, keeping us inside of this balance area. It would also, as you can start to imagine, start to produce this very classic head and shoulders pattern. Again, it's not so much about being able to identify the pattern. It's more so about being able to identify when a trend changes. Okay, so there's your 4-hour time frame chart. For the most part, this open inside of here, yes, it absolutely is becoming slightly more concerning. Let's take a look at the hourly time frame chart. The bull case is, I don't want to say it's evaporating, but it's deteriorating, that's for sure, right, with the lack of hold at 4160. So what's taking place here on the hourly? Once again, if we think about trend, even on the hourly, we have lows, higher lows, still an opportunity technically for higher lows at the 4130, but once again, this is a gravity point. It's not a important area of support, okay? So keep that in mind. Obviously, we did break down underneath the double top neckline, so touch 1, touch 2. There were your 2 equal lows, and lo and behold, that's exactly where the market failed yesterday, remained underneath 4,200. I will admit, like the breakdown, it really came later in the day. You had to be at the screens for a while to actually capture that. It was as the big tech cohort started breaking down, right? It's as Tesla topped out and started to fail after that secondary bull flag push. We talked about this in the Discord. It was the XLY, right? The XLY was your key to the pullback yesterday in the broad market, right? So anyhow, keeping it specific to the ES, what are the numbers here on the hourly chart? Well, it's quite clear. 4160 is already acting as resistance here in the pre-market. We are opening on a gap down. We'll talk about that in just a moment on the 15-minute time frame chart. But from the hourly perspective, it's really two things on the open. Really, because gap rules are in play, we know that we're looking for a rally first to close the gap. First area of resistance, gap fill reversal, right? Off the prior low of day. That keeps us underneath 4160. That is a bearish indication on the lower high underneath. This is the equivalent of roughly SPY, that's a terrible dollar sign, but SPY 413, right? SPY 413, 4160 ES, right? Same idea, same thinking. We'll, of course, get to the SPY ETF in just a moment, but for now, this is kind of, the key zone to be watching. So gap fill reversal, bearish, keeping us underneath 4160. Even if we go into the previous day's range, bearish if we get a lower high at 4160. So very difficult to build a bullish case with the implied open being underneath that 4160. All right, I think that inside of this prior range, obviously things get hairy. We're back in kangaroo land, but once again, hopefully the thinking now is that because we have a failed breakout in the upward direction, we have trapped longs, and there should actually be some follow through in the downward direction now, in theory, if we start to see that continuation. All right. So looking for rejections at prior low of day, 4160, based on the hourly time frame chart analysis, and no longer holding at the ideal 4-hour higher low. That would have been right here, 4160, right? We closed underneath yesterday. We're opening underneath today, 4160, 4160, 4160. And we know where our downside targets are, right? If we go right to the top of the gap, 411150, 411150. Okay. We've talked about the hourly. We kind of understand the context we're in. We're off of this double top pattern. We're off of a failed break of the top of the larger range. And we're also not holding the interior range from right here. All right. So that's the context right now. The market is not holding up on the bull side as long as we're underneath 4160. The bears are building an edge here. The bears are building an edge. We had an opportunity. The bulls could have proved themselves here. It simply did not happen. So we are rolling with the punches. And we are understanding that bears are building an edge under 4160. And, kudos to you. If you were shorting up here saying that this rally is a fugazi, then again, congrats. That's just outside of the tolerance I have for risk, and I don't think it's the proper way of looking at markets. But, if you caught it from up here, I'm not going to laugh at you. I mean, obviously, you have the best trade location, so congratulations. Congratulations, okay? So let's continue along. 15-minute time frame chart. This is where we get into our morning questions. What's going on with the morning questions? So let's ask the three that we're always asking. That way we can stay on track and remain sort of in alignment with what we should be thinking about on the open. Question number 1, where are we opening in relationship to the previous day's range? Here's the high, here is the low. And what we'll notice is that we are opening on a gap down. We are opening on a gap down. So get a nice down arrow for question number 1 this morning, and as we know, it instantly puts gap rules in play. We were sort of hinting at that on the hourly time frame chart. We'll get into them in just a moment, but we'll continue along and talk about question number 2 first. Where are we opening in relationship to the overnight range, actually producing new overnight lows as we're speaking, sort of pushing into those overnight lows. So I've got to adjust this just a hair lower, but that, of course, is bearish. But as we know, whenever we're dealing with gap rules, it does imply that the risk reward is actually favorable for the fade first. Favorable for the fade first, as long as we can open on this overnight low. Once again, gap rules will come in just a moment. Question number 3, last but certainly not least, what is the overnight inventory position? Net long, net short, same thing as saying the close. How much time was spent above the prior day's settlement or below the prior day's settlement? How much time here? How much time here? I would argue that we're more net short, but slightly more balanced than you might imagine. Sure, there's more distance here, but this kind of neutralizes a bit. I would call it probably something to the tune of, I don't know, 80%. Let's go 80%. It's certainly not 99, and it's not 100% net short, but it's probably somewhere between 80 and 85% net short. So noting that, yes, there will be shock and awe. Yes, we are opening on a true gap. Yes, we do have an open close enough to a pivot point here to offer good risk reward. Gap rules should be playable this morning. Gap rules should be playable this morning. We're dealing with roughly about a 15 point gap here, depending on where the open ultimately ends up being. Prior low of day is 41.5275, 41.5275, and the current open intended is around 41.50. All right, so between 10, 12, 13-ish points of gap here to be trading for, and as we open on the overnight low, yes, makes sense risk-reward-wise to look for that. So here's the framework. Just remember that these two things must be true before we're looking for a fade. So number 1, we must fail the overnight low, meaning that markets must not be spending time underneath the overnight low. Sellers cannot get acceptance underneath after the opening print. This is a bad drawing, so let's try that one more time. Number 1, overnight low must fail. So I'll just put a little X here for a failure. So that looks something like this. We open here, we go underneath, we fail, and we come back above the overnight low. That is a failure of the overnight low. Sellers are not getting acceptance down there. Sellers are actually not getting rewarded if they were positioned short in this general zone down here. Threshold number 2, criteria number 2, I suppose, would be that we need to rotate through the opening print, right? If we're over the opening print, okay, we are looking for a long to close this gap, and as we can see, the risk reward on a trade that looks something like this, stop underneath the low of the day, it's decent. It's decent. You could look for like a 2.5, maybe 3 to 1 there, depending on where the opening drive lower ultimately goes, where that failure of the overnight low ultimately goes. But something like this is very reasonable to trade for on the open here to close the gap. So why are we looking for this? Once again, let's remind ourselves of the psychology, because I know it can be very overwhelming to try to long a market that seems like it's falling off of a cliff here. Why are we longing this in the first place? And I'll just put a little OP here for opening print. Why are we longing this? Because there are trapped shorts here with bad location. We know that based on pre-market, right? Volume always increases as we get closer to the open, and we are sitting on these overnight lows. If those traders who are likely short-term traders, it's not JP Morgan's trade desk, it's not Wells Fargo, it's not Citi, it's none of those guys. They don't put in volume that looks like this in the pre-market. They look like this. They look like this, and they look like this, and they look like this, and this into the close, right? So if it's not JP Morgan, and it's not Citi, and it's not BlackRock, and it's not, SMB, right? Those guys aren't, well, maybe SMB has a singular prop trader doing something in the pre-market, but they're not moving 1,000 contracts, right? Or at least that would be astounding if they were. To me, these are short-term traders. There's always this connotation that's bad with being weak-handed. Weak-handed just means that you're not intending to hold the trade for a long while. It's not a good or a bad thing. It's literally describing the types of traders involved. But we have weak-handed shorts potentially getting involved here, right, at the lows with terrible location. So once again, if we fail the overnight low, these shorts with bad location, if we rotate back up through the opening print, are the first ones to start to feel like they're underwater, right? They will be the first ones underwater with bad location, unless someone literally short ticks the low of day. So please don't do that. If you, right? So when these people start to panic, we go through the opening print. We say, okay, screens go from green to red, or excuse me, red to green. My apologies, red to green over the opening print. Now we're looking for that gap to close. It's not a full-blown reversal. We're not looking for new money buyers to send this thing back up to equal highs way up here, over 4,200. We're just looking for a little bit of inventory correction, right? Get the froth on the short side out of the market from here, and then here is where we look for the gap fill reversal, right? Rejection. Why do we look for that? Again, think about this very logically. Pretend that this is a daily time frame chart. We're going to clear this up. If this was a daily time frame chart, your candle would look something like this, okay? So there's your candle bar. There's your upper wick. Here is your lower wick. All right, it's a big red-bodied bar. This is all shaded in with red. All right, so in an ideal world, prior support now acts as resistance. What is that? That's a gap fill reversal. It's a gap fill reversal right off your prior low of day. We don't want any acceptance if you're a seller inside the previous day's range. So you can probably imagine where my head's at in terms of scenarios for the open here and what I will be thinking about, what I will be thinking of in terms of frameworks, right? So gap rules tell us that, again, this is probably what we want to see here and then here, reversal. All right. So there's your open. That will always be the first target after a gap fill reversal from here back down to the opening print. And then if we go through it, we know what we're looking for on the downside. 4130 is your gravity point. And then underneath that, we have the gap down here somewhere around 41. Geez, too many numbers? No. 41.1150. There we go. 41.1150. That's the number. That's the number that represents the top of the gap, okay? So this is what I would prefer to see on the open. This is your textbook move. Does the market does it always give us a textbook move? No, not usually. Usually it wants to play, little games here and there and, do different things and maybe make a couple ticks above and then come back down underneath, right? So just be prepared for a little bit of nuance. It's not going to be perfect off the prior low of day. If it is, then again, we'll put this in the history books, but it may not be perfect, right? So what else would I be thinking about here in terms of situations? Well, if we do go gap fill and then we poke into the previous day's range, then obviously the prior low of day just becomes your level, right? Why? Because if we make a higher low inside, then all of a sudden we're accepting back inside the previous day's range. This is your proof of acceptance. Maybe there's a rotation higher. The issue with this is that there's not much room to run into 4160. So would I be an advocate for new money longs just on a higher low back inside of the previous day's range? Absolutely not. Absolutely not. I think you have to clear, and you can see this clear as day. You've got to clear, which is clear as day, no pun intended, this area of resistance here, just north of 4160. So we know 4160 is the rough hourly structure that we're dealing with. If we're taking it to the nuanced level of the 15-minute time frame chart, I mean, look, there's your end of day little rejection after the last flush. Here's your overnight high. Here's your overnight high. It's got to clear that level. 4166, 4166. So this is a good first step if you're trying to remain bullish and look for that higher low, but you've got to get here. You've got to get up and into this space here on the prior day's range if more bullish things are going to take place in this market. Bears will, continue to be building a firm footing in the market as in if we start, this is bearish, this doesn't matter, still bearish underneath 4166. All right, overnight high, little pivot from in here into the close of yesterday's session. 4160 is the larger hourly zone, right? You can see what we're building out as a case for, right? So longs are on the table for a gap fill. Again, I would be very skeptical about holding it after we touch the prior low of day. You can monitor for continuation. Don't get me wrong. You may not want to be all out of the position here, but I would definitely take off like 3/4 of the position, monitor for continuation on a little bit more. If it does go here, great. You'll have a quarter left of exposure. If it reverses, you can stop out, wherever your trailing stop goes based on market structure. All right. So prior low of day, big pivot point, 4166, big pivot point as well. As long as we're underneath these things, bears are building more of a foothold in this market. Okay. We'd have to really reevaluate what's going on here. Are we above like an upward sloping VWAP? Is there some other different structure up here that we can trade against? If the markets get above the overnight high, there's nothing I can tell you here in the pre-market session that would offer a clean indication for that, right? Obviously, buyers are fighting back if this becomes the case into the close, but that's pretty far-fetched opening so firmly underneath, at least as of right now. All right, wouldn't be my first thought. Would not be my first thought. All right, so that is the 15-minute time frame chart. That's your breakdown. We talked about levels down underneath us. Again, 41.30, gravity point underneath that, 41.1150 is the top of the yellow gap down here. Follow the yellow brick road, right? So ES, complete, done, finito. We've talked about structure. We've talked about, what happened yesterday. We did close some of these singles, right? The only reason I'm leaving them on there is because they are offering confluence with this general area here. And technically speaking, some of the gap remains in single print territory right here, right? So this little area is like, I don't want to call it double gap because technically singles are not a gap, but we think of them that way. So this is just an interesting area of the market, right? So if we do this and then roll over here, it should make sense as well. We'll remove those when and if they're completely traded through, okay? So that is, and also singles right here represent value area low out of the ES, okay? That's what we've got on the table for today's session. You know the situations, you know the frameworks we're looking at. Again, gap rules are in play. This is primary situation number one, something that doesn't even fill the gap in the first place, or a partial gap fill and starts to drift lower. That's primary situation number two. Market does something like this, and we'll reconsider. That's probably lower on the tier list of things to be thinking about on this morning. But yes, bears, you are building some sort of edge. Very good breakdown of the double top neckline yesterday, rejecting there into the afternoon session. All right, let's take a look at the NQ. What's going on with our NQ? What is up with the NASDAQ 100 side of things? Let's take a look at the 4-hour time frame chart first. I do want to point out on the 4-hour time frame chart, just remember that the NQ, although it does look nasty, although yes, we are breaking down from a double top neckline in here, where's trend? Trend is still way down here, okay? So if I just do something like this, trend is still lower. We can afford to pull all the way back down into this 13.5 level. We talked about this yesterday. We talked about it on Monday. 13.5 can still act as support, and it can still keep the 4-hour trend here alive and in the upward direction. So just be mindful of that. Yes, this is nasty. Yes, this breakdown is aggressive. Yes, there will be short opportunities intraday, but the larger time frame trend has not yet even come close to attempting a trend change, okay? It will be very, very important to watch. When and if we bounce off of this trend line, do we make subsequent higher lows above and aim for the equal high, or is it just a big lower high and a reinteraction with the trend line? If that's the case, again, let's think about this. On the 4-hour time frame chart, remember, you can carry this forward for any time frame, but specific to the NQ, at least on the 4-hour. If this test to the trend line is your best test, because we're coming off of a higher high, correct? We're coming off of a higher high. We know we're in an uptrend. This is usually where your trend line's the strongest. If we bounce off of it, produce a lower high, and reattempt the trend line here, after this to this, do not trust the trend line on that second touch. Do not trust the trend line on that second touch. You'd really need other evidence that this market is going to hold up. Otherwise, you're combating a big 4-hour lower high. You do not trust the trend line on a lower high touch, okay? So anyhow, 13.5 trend line, all of that's on the table for today's session. It would not be unreasonable for the NQ to put in some sort of range that looks like this and gets us there. About 150 points, it's not unreasonable on the downside for the NQ. All right, so 13.5 is really your key structure here. Let's drill on down to an hourly time frame chart and see what's going on. The trend line should be curved. I don't know that it would be a trend line. If it was curved, it would be a trend curve. Anyhow, NQ on our hourly time frame chart, our laser light show is coming into play, right? So obviously we closed these single prints here. We can go ahead and remove those. Those are no longer really as important as even the ES single prints, right? I will perhaps just, I guess we'll just understand that it's the overnight high, really. This area, let's get rid of those B singles, right? Overnight high area, it's going to just provide some similar thoughts and process to the ES, right? If the buyers are going to make any progress, it's really got to be a stronger move over that. Quite a ways away, considering the downside move we're making pre-market. Also, here's another thing to carry forward. Single prints do not fill in the pre-market, which is why we cannot say that these have filled from here down to the open of this day. And these obviously are not in play just yet, so everything else will remain. What we will do is adjust our overnight low, and of course, this means that we are opening on a pretty solid gap at this point. Notice that there's your prior low of day. There's where we're intended to be opening. Double top neckline has broken down. Of course, once again, the levels here were pretty. The levels here were pretty on the NQ yesterday. Once again, once Tesla really started to pull back more aggressively, that led to your big downside. Tesla was the one that was propping up the market yesterday, and it basically gave back almost all of it. So anyhow, what does that leave us with in the NQ for today's session on the hourly time frame chart specifically? Once again, if you are a bear, you are just looking for a gap fill reversal. Any lower highs there keep you happy, keep you looking for downside outcomes. Even if we rally a little bit further than that, I would be very skeptical of this area here in the market. That's your overnight high area, and basically the equivalent of what we just talked about with 4166 in the ES. 4166. So that number is going to be around 13,750. 13,750 in your NQ futures. That's where you're looking for a lower high here or a lower high here. Let's not get ahead of ourselves. We'll take care of that on the 15-minute chart in just a second. Just want you to be prepared with the downside structure, right? We talked about downside structure. 13.5 is the 4-hour pullback. And these single prints, these ones here from the original breakout, right, are going to be from 13,619. 13,619. They close at 13,562. 13,562. So 619 and 562. 619 and 562. Carry that forward. This should be treated as very thin structure. If we start to get into it, you should treat that as almost like a gap. Almost like a gap, right? So that's the hourly time frame structure. Of course, we know that ideally, right, this keeps the 4-hour, hourly structure bearish to the utmost degree, right? A lower high underneath the neckline of the double top. Okay, now we're cooking with fire. Don't trust that trend line down here at 13.5 or whatever on the reattempt, right? So 15-minute time frame chart. What's going on over here? We can see once again that we are opening on a big gap down. So let's keep it kosher and go through our 3 questions. Number 1, prior day's range. There's the high, there's the low. Opening underneath. That is a true gap down. Gap rules are in play. Question number 2. Where are we opening in relationship to the overnight range? On the overnight low, for all intents and purposes, fairly far away from the overnight high here. So that is bearish, but once again, sets up good risk reward. Almost a mirror image to our ES, so we're not going to rehash all the psychology, but we will walk through all of the questions. Number 3, prior day's settlement right here. This one's a little bit more net short. Notice that the move here is a bit more extended than the ES. So I would venture a bet that we're something like 85%. 85% instead of just 80%, 85% net short in our NQ futures here as we come into the opening print. So yes, there is inventory to correct. Yes, there will be shock and awe. And yes, there is good risk reward for your gap fill trade to be on the table and then looking for your reversals. So all of that psychology remains the same. Poorly located shorts will be the first ones out and produce this sort of move in the first place. Just because I see we have a couple more viewers now that we're talking about the NQ, I do want to be very clear that once again, the only reason we're going long is if we fail, number 1, the overnight low, so a lack of acceptance down here. We get back up and to the opening print, then through the opening print. So 1, fail the overnight low. Number 2, through the opening print. All right, those 2 things must be true to look for the gap fill. All right, so the only reason we're looking long is if we failed here and if we recapture here, the opening print. Then we look for a long to close the gap, and then we'll look for a reversal off of that gap fill reversal, right? And now we can sort of imagine on the hourly time frame chart how all of those situations come to fruition that we were just describing, all right? So sellers remain in control on a gap fill reversal. That's here, prior low of day. Sellers remain in control even if we do something like this and reject here at 13,750. 13,750, that's your kind of line in the sand based on this. And then if we poke above that, that's where I would start to say, okay, maybe the buyers are doing something impressive here. But for now, in the short term at least, this kind of, to me reflects more of a bears in control type market. Now, if we do continue to extend in the downward direction, because let us not forget here what's going on in the hourly, right? If we do continue in the downward direction, would I be an aggressive short at the closure of the original singles from back here? Let me pose this as a question to the chat. I want you to answer this in the chat. Look at the chart that's on the screen in front of you, and the question I want you to answer is, would you be an aggressive short as we start approaching the closure of the single prints here? That is the question I actually want you to answer in the chat. Okay? Let's see what the chat's thinking. Is that a yes or a no? It's just a yes or a no question. Aggressive short here or not? Yes, the answer is no. Yeah, everybody's nailing it, right? So I really wouldn't recommend that you try fishing for big new money shorts here. Everybody's got big string of no's in the chat. Congratulations, chat. We are all correct there. remember that this is still, we talked about it on the 4-hour, we talked about it on the hourly, right? This is still in an uptrend. This is still certainly in an uptrend. Now, I know it feels like the world's ending here as the pullback starts to unfold, but for the most part, this is still in an uptrend. So as we come into support here, it's at least worth not being an aggressive new short, and probably perhaps even flipping the script and saying, if we see any kind of bottoming pattern here, maybe it's worth looking out for a reversal. All right. Ideally, it's off of structure 13.5, but this would be the first place I look. Single prints closure, 562, right? So that to me is going to be an important inflection point. Let's not forget what's at our backs. This big uptrend here, all right? Big retracement, big pullback feels nasty, but at the end of the day, can we buy a higher low on the hourly time frame chart? Can we buy a higher low on the 4-hour time frame chart as they both remain in an uptrend? I would say the answer to that question should be yes on the first intended test, okay? So I don't want us to get overly bearish on just one day of sell-side activity. Again, I think it's reasonable that intraday we can look for gap fill reversal. We can look for a rejection here at a known area of resistance. That's reasonable stuff, looking for the pullback to continue. But once the pullback reaches its destination, aka just a key area of support that is not in this parabolic squeeze to the upside, then I think it's worth falling back on what we know, which is that the NQ is in a 4-hour uptrend, and it's also in an hourly uptrend. Okay? This is not my opinion. This is not my just random belief that I'm trying to push onto you. We can see this is an uptrend. Sure, we've got a double top rejection starting at the top, but coming off of a higher high, if the uptrend is going to remain, there will be a higher low here, or there will be a higher low here. If that does not happen, this is where larger concerns happen in the market, and we will change our bias short on the higher time frames with a lower high underneath 13.5. Okay? So remember, always take a balanced approach. Always look at the evidence in front of you. Do not get too caught up in just the intraday. If you're just a scalper, and when I say just, it means, if you're a scalper, we should just say it like that. If you're a scalper and you just trade, little 30-second holds back and forth, you don't care about the hourly trend. You don't care about the 4-hour trend. You're probably just looking at the 15, 5, 2-minute charts and making assessments from there. And yes, to you, this is a very bearish move that's been unfolding. You're probably trading a majority in the downside. But for people who are just, not scalpers, non-scalpers, just more along the lines of looking for better entries for, I would just call them longer day trades, I think that these are things to be mindful of, okay? So anyhow, that's my take on the NQ. That is my take on the NQ. We've talked about the levels. We've talked about where we're looking to get involved. Let's move along. Take a look at the Russell 2000. What's going on with our good friend, the Rut? And what we'll do is we'll bump this up to a 4-hour time frame chart first, and then we'll drill down. So the Russell is at a do or die level. So in the ES, right, the do or die level, hence the title of today's video, is 4160. We don't really have a do or die level yet in the NQ that's coming into view. That would probably be the 13.5 level, 13.500. But the Russell here, it's back at do or die. Back at do or die here at 1780. We know that this is a key inflection point because it represents the sort of boundary between the two balances. If the bears were making progress here, this should not have taken place. If the bears are going to continue to make progress, they will push price down into the range. If the bulls are going to make a stand here and do something like this, we know that at the end of the day, okay, new balance being built up here. Not the shoes, but new balance being built up here. And maybe over time we can do something like that after the sellers could not materialize in this lower range for a larger breakdown. Okay, so be mindful of that. Hourly time frame chart. Russell, what's going on here? We know that this was originally the intent for the head and shoulders. Now, if it's going to be a larger one, right, we're just looking for a lower high, ideally at this point under 1790. If I do something like this, I know this again looks like a laser light show, but it needs to be that way. If we do something like this, turn off the extended hours chart, it gets a little bit easier on the eyes. Just understand that right now we're trading around the 82 mark. So that's right here, hardly above the overnight low. So this is where we're currently trading, the white dot, right? This is why this 1790 is an issue, right? This represents support here, clear rejection. This was a rejection. This is a gap up, of course, right? And then it fades back into that range. And now it acted as support on the prior day's session. So 1790 is not just the prior day's low. It's not just this arbitrary level that we're looking at. Again, here, this white dot here is the intended open. So if we do see a rally out of the gates that gives us a gap fill and then a reversal, here's your hourly head and shoulders, and then back down underneath this boundary point that we were just discussing, right? Things start to get nasty because we have single prints down here to start closing. Really thin structure. Look at this breakout. Nothing here. Nothing here. Even still, not much there. Remember that as we got into those singles, the market did start to like perk up out of them each time. Technically those singles have been filled, but I would just look at them and still say that there's not much there. I suppose it's almost the equivalent of just using this. It's really the start of the singles, these lows, that are your key point for downside, right? 1775. All right, so Russell, use this as a gauge for price. If it fails here and gets back down underneath, you know that nasty things will likely start taking place for our market. Getting deeper into this lower balance range probably represents a larger breakdown of your ES, right? So Russell 1780, or excuse me, let's be a bit more precise. 1775. 1775. The points and the ticks matter in the Russell. It's a cheaper product in terms of the point value of it. So 1775, and then 1790 though will hold at 1790. Not will hold as in, it will hold as resistance. I can't guarantee you that, but the level is certainly 1790. We'll keep that as the number. So 1775, 1790 in your Russell, and that will be the big gauge for our market on today's session. Here's the 15-minute time frame chart, and we'll throw back on the extended hour so we can talk about the three questions. Obviously, we'll keep it a little bit briefer here in the Russell. It is gapping down. Of course, we're opening close to the overnight lows. We're removed from the overnight highs. Gap rules are in play, risk reward is decent, and the overnight inventory is what? Basically 85, maybe even 90% net short here in the Russell. So gap rules are in play, failure here, this, and then a reversal against 1790. There's your head and shoulders pattern, and bearish things unfold underneath 1775, right? So Russell, that's the primary concern here out of this chart. If we get above 1790 and do something like this, okay, we're holding on to hope, and perhaps there's a rotation back up towards the 1820, so a higher low over 1790, higher low over 1790 back inside of your previous day's range. Very, very encouraging for markets, believe it or not. Very, very encouraging for broad markets if this takes place. You should probably be looking for the NQ higher low. You should be looking for the ES recapture 4160 if the Russell is the first one to get the higher low back inside the previous day's range, but also over the 1790 level, all right? So very encouraging type move can unfold there out of our Russell. Let's wrap up our futures here. They are done. Futures are done in terms of the index futures analysis, and we'll get on over to our cash ETFs. Something I want to try here is looking at, in reality, like the best structure comes from this chart over here. Here's the SPY hourly chart with the after hours data turned off. Okay, so right now we're currently trading. This is the bid-ask spread. Always on Thinkorswim for the current traded price. So 412.20s is where we're trading, basically right on the lower edge of the weekly expected move. We know that the ES is gapping back down into this right here, but it's just easier to see the structure on a full screen chart like this. Also, I'm seeing out of the corner of my eye, Luke B. Thank you for joining as a supporter. Congrats and welcome to the team. Appreciate you being here. Mega with a check mark. Not sure who Mega is, but Mega with 2 G's. What's a gravity zone? Hopefully you're still in the chat here, Mega. But gravity zone just represents an area where the market should be drawn to. Think of it literally like gravity, right? Gravity keeps us on Earth. It keeps us stuck to the ground. It's a sticking point. It's not so much an area of support, just an area where the market should be drawn. Like if I did something like this, that's the gravity point of this range. So that's for Mega. All right. So anyhow, continuing along through our spiders, right? Again, I want to show you the hourly structure. It's just so much. It's so much easier to see it here. I've been, this is really where I do most of my markup, most of my analysis. And I know we look at the 30-minute chart with extended hours on when we're coming into the pre-market session so we can kind of see what's taking place pre-market. But look at the chart, right? It's not an accident that we had a level at 1725 coming from prior rejections, and more importantly, this intraday rejection, prior lows in here, right? As soon as that breaks yesterday, it brings in the downside, right? So I want to show you this perhaps version so you can kind of understand a little bit better where the levels are coming from. All right, so 417.25 led to the breakdown. This represents our single prints, right? So let me actually just draw this in with a level. And we've been monitoring this as we've been using 50. All right, so we'll go to 50. Right underneath 414, 414.50 is the single print closure. We know that we're opening down here. So I'm just going to draw in with a dot where the open is based on the bid-ask spread, and we'll understand the structure, I think, a bit better with this full screen chart. All right, I think it's just easier to understand this way. And you can let me know in the chat. Does this seem to make more sense than looking at the split screen side by side, daily time frame over here and 30-minute time frame after hours on with like 2 days worth of data over here? I think to me, this is where I would prefer. This is where I do prefer to do my analysis, but I'm just trying to think of the best way to present that, right? Trying to think of the best way to present that. Because if we do something like this, I'm just going to throw it up there briefly. I mean, you can see the levels vaguely on the daily time frame chart over here, but you know, on the 30-minute, we can understand that it's support, but it's really more important to understand where it's coming from here and on that intraday. So, anyhow, yeah, I think going back to this will be a bit better. All right. So anyways, getting into the ES, or I should say the spiders, the cash ETF here. Let's get started on the SPY, right? So we know we're opening down here. We know that gap rules are in play. So if we fail the overnight low, this is the one drawback of not doing something like this. So perhaps what I'll do for tomorrow's stream is have like maybe a sliver of, actually I can just do it. I'm just going to do it. All right. So this is what I'm going to set up for tomorrow. We want to go here. And I know I'm flipping around with the charts. I'm playing, you know, I don't know what I'm playing over here. I'm playing games over here. But this, I think, will just make the presentation a bit better. So let's go hourly chart over here so we can understand that structure. And then on this side, we will go with the extended hours on. And then we'll just go with like, oh, I don't know. Let's go with a 2-day 15-minute chart so we can see where we're intended to open. And what we'll do is something like this until that y-axis goes away. There it is. And we'll zoom in so we can just understand what's going on in the pre-market. All right, so this is where we're opening, right? 413, pre-market highs, 413. You can see as well, top of the range over here. All right, maybe that's too small. We'll figure it out as the stream continues to progress here, but I think that this is a good way to start presenting this, all right? So 413 pre-market highs in here where we're obviously struggling, 413 top of the range here on the hourly time frame chart. The intended open is literally right on basically the lower edge of the expected move. So gap rules are in play. The added context here on the SPY daily or hour, it doesn't really matter, but the SPY weekly expected move being at 412.20 would tell us again that new money shorts down here on the lows after this pullback, probably not all that ideal. You know, if we do fall deeper into range, just understand that we're extended from the expected move. So be mindful of that, right? But first things first, still looking for this. And then, you know, rejections back down underneath 413. That kind of keeps us in this madness land. If we do get above 413, so we go gap fill and then do something like this, we know that 414.50 represents where we have to get above for more of a solid rotation back up to the neckline would be the first target, 417.25. 417.25, all right? So that's really the spiders in terms of what I would be looking for, right? It's gap fill and then looking for a reversal here. Key question comes in at 413. Do we find a higher low above, in which case over 414.50, single prints from this move back here? That's where we start to look for the long rotation back into 417.25, right? So if you're a long trying to play this market, this is what you want to see. And then you get active here or equal high break through the breakdown structure to tag 417.25. All right, that's the upside move that I could see unfolding. If you catch it on the gap fill and you're long from down here, then again, kudos to you. Just trail the stop higher. Trail the stop higher. If the bears are going to remain in control, it's going to be a gap fill reversal. No support at 413, keeping us inside of kangaroo land back here. Or the other short indication would just be something like this. We get something that does this. Shorts are not getting involved on this move higher here, but instead they're looking for a big rejection off of 417.25. So if you're a short, there's two places to get involved. Patience play is up here on the retest of 417.25, right? Or a gap fill reversal that, you know, keeps us underneath 414.50. That's the other short indication. So two places to get short here and here. One place to get, or I guess two places to get long as well. Two places to get long, right? We're opening here, so gap fill reversal over the opening print closes the gap. So long number one is there. And then long number two is perhaps here, right? If we can prove it, right? It's got to be a break, retest higher low, and then rotation here, Okay, those are the two trades for your S&P 500, both long and short. So I guess it's 4 trades. Let's move along and look at the QQQ. Here is the hourly time frame chart. Again, I love this just because the structure is so clear. Look at this level. Look at where the breakdown comes from. Look at where we accepted into the close. Obviously, in the pre-market, we're opening on a massive gap down. The intended open is right here. I'm just going to draw in a level. This is the intended open. That's where we're trading in the pre-market. So we can see that on the hourly chart with extended hours off. And what we'll notice, right, is that it leaves a big opportunity for a gap fill reversal to keep things bearish, right? Big opportunity for a gap fill reversal to keep things bearish. This area represents the single print closure, basically, where we said that we would first be looking for an area of support on the NQ, right? We talked about that on the NQ. Right here, that's going to be at 328.50. So if we do go gap fill reversal and the market starts extending outside of the weekly expected move, 328.50 should be seen as a potential area of support. I would be looking for longs off of that level, considering we are in a strong overall uptrend here. And then shorts, right? You can look for shorts here, or you could look for shorts here. Both of those are reasonable, sort of on the idea that we're producing an hourly lower high. I would just say that, you got to be ready to bail on that short here at 335.50, just because of the strength of the preceding trend, right? It gets fairly difficult to do that. So anyhow, the trades out of the QQQ, once again, gap fill and looking for a reversal off the prior low of day. I'm going to be very clear about this stuff, right? There's your short indication number 1. And then if we get to here, that's where we're looking for a long back in the opposite direction. So that's really the textbook structure. If we do something like this, complicates things. Maybe there's a short up against 335.50. It's not the ideal one. This is kind of your ideal level, right? 335.75 gap fill reversal, rejecting here, right? This is the better short out of the QQQ, staying underneath that area there. Okay, that's the QQQ in terms of levels to be mindful of. Let's go ahead and remove that. Let's jump on over to the IWM. IWM Russell 2000 small caps. Once again, if this is going to turn into a head and shoulders, we already know the deal. It's going to do something like this. Gap fill reversal underneath 177.50. 177.50 is the number. If we zoom in on this micro extended hours, I think it's got to get a little bit bigger. That's just a bit too harsh on the eyes to be squinting and looking at. A little bit bigger is better. So once again, you can see we're opening here. So gap rules are totally in play. I'll just draw this in on the hourly, right? So if we fail the overnight low, looking for a reversal to here and 177.50. Any rejections underneath, build out your right shoulder, right? So it's going to look something like this. And then we have a larger head and shoulders. Flush of 175.75 is your key number. That has not changed. That is unchanged out of the IWM. 175.75 for the IWM, okay? So we've gone through the broad market in terms of futures. We've gone through in terms of ETFs. We've got 9:13 on the clock. Let's wrap up the last 7 minutes of the stream with our core list of companies here. Apple is up first on the chopping block, and it's really getting beat up here. It's opening technically inside of this gap, which we know is from the earnings move. After a it's not fake move, it's just a failed breakout, right? Failed breakout, head and shoulders, whatever. Under that 174, we were really looking for downside outcomes. It never even closed all of that overhead gap, right? And started to break down more aggressively here. So as we move into this gap underneath us, it's worth being mindful that we're getting a little, I don't want to call it overextended, but we have gone for more than a 100% retracement of where the rally stemmed from. Okay, so just be mindful of that. If you're looking for a new money short in Apple, I think the best thing to do here is to be responsible. Let me just draw in where the open's intended to be, right? This is the intended open on the hourly, right? You can see more than your 100% retracement. It's got to be a closure of the gap overhead and then a rejection for a fill down below, or it's got to be a bit firmer, and I would look for the rejection to ideally be underneath 172.65. 172.65. Why is that the number? Look at the hourly chart. Again, where does your structure breakdown come from on the previous day's session? 162 or 172.65, and also previous rejections from here and where the rally started from on this last attempt to break higher. All right. A middle finger top from Steve Kang. Also, big shout out to Crispy. Crispy, Chris, shoot me an email or a DM in Discord. I got to make sure you get that calendar and we settle up on that last conference together. All right. So I owe you that. We'll connect on that. But thank you to Chris for the 10. Hopefully he's collecting boatloads of premium this week. Anyhow, Apple, back to business, right? 172.65. That's kind of like your line in the sand for ideal shorts to do something like this. Gap fill reversal, also very reasonable. All right, so Apple is getting extended here on the downside. I'm not sure that I would just look for like full-blown collapse, gap and goes here. I think you're playing with fire. Now, it is worth noting there's no structure underneath us, so be mindful of that too. But for the most part, I wouldn't be looking for just shorts out of the gates. I would be looking for some inventory correction, then gap fill reversal from here, lower highs anywhere underneath 172.65. Okay, done with Apple. Let's take a look at Netflix. Netflix was a pretty decent rejection yesterday of that 364.75 level that we had discussed, right? There's your flush point. There was the closure underneath on the Monday session. Rally into it, fell right off. So what does that leave us with for today's open? We're opening right at the lows of the prior day's session. It does leave some of this thin structure underneath us to be retraced. So that is certainly what the trade will continue to be. The reason that I think that this is at least worth considering, continued shorts is look at this activity, right? This is kind of that password crackdown, right? So everybody's talking about the password crackdown, but it still just produced a lower high, basically underneath and at the opening print, 361 previous structure from off to the left on the daily. So I don't, everybody's talking about the password crackdown thing. That's great, but this lower high is already becoming a bit of an issue. Now, again, we're in the face of this overall move. Let's not forget that, but just in here, consolidating on these lows, I don't really think it's a clear-cut long until there's a better indication back in the upward direction. Primarily, it would just be a recapture of the 361, right? Something that does this. Okay, now we can start to look for perhaps, this would be a trade, into here would be a trade, right? Those are the different ways to look at Netflix. Just in here, there's no real structure to trade against yet on the long side. It would be either a full-blown retracement here or show and prove first, one or the other. Next up, Tesla. What's going on with Tessie and Mr. Musk? Sleeping all sorts of crazy hours, working on SpaceX, Twitter, Tesla, gapping down. So gap rules will be in play here. Here's the intended open out of Tesla. You can see that we're opening here. So once again, we are opening near an area of support. Gap rules will be in play. I would say that this is favorable because we're coming in for the retest of that 181.25, right? 181.25. So on Tesla, doing something that looks like this, probably a decent trading opportunity on today's session. Right, so even if we do continue to drift lower out of the gates off of the gap momentum, I would look at 181.25, and I would say if we're above that, it represents being above the consolidation level. Remember that this was Friday of last week, and although, yes, the daily bar looked like a solid green-bodied bar in here, it really was just consolidation all day long, right? Building out this wedge. This is where the breakout came from. So 181.25 is your key level out of Tesla. As long as, again, that's holding, I would say that we're looking for a higher low and trying to do something like this into the future. Now, it's helpful. Let's be very mindful of this as well. It's helpful if the Qs, it's helpful if the spiders find support as well if you're looking for that as an outcome. Right? If you're looking for this, you probably don't want to see the broad market falling off of a cliff, making new lower lows. So what comes to mind, right, is the ES in particular falling into that balance range. And if we just go to the SPY for a second here, it would look something like this. We would not want to look for Tesla support at 181.25 if the SPY, if the ES are doing this. So we do not hold 413. We go gap fill reversal. We're back down underneath, and we're breaking 410.35. Right, that is your line in the sand out of the SPY on the downside, really. Then the gap is in play, right? So if the SPY is doing something like this, if the SPY is not trying to work back into or stay above 413, I'm not thrilled about looking for Tesla longs at 181.25, right? Can you see how those two things almost have to go hand in hand? They almost have to go hand in hand, right? So back to Tesla, back to zooming in on this hourly. Sharp rejection yesterday, right? And, failing to hold above that 188.50. But I do think that this isn't on the table if the broad market's trying to find support today. If it falls underneath, wouldn't want to get involved in this consolidation here. Better indications are deeper down towards 173.75. So those are the numbers out of Tesla. Google. What's going on with Google? Intended open. Let's put it on the chart. There it is. It is here, right? So we're underneath what could be the beginnings of a double top rejection, right? Touch 1, touch 2. there's the neckline technically of that pattern, and we're underneath it. So 122.15 is key resistance. As long as we're underneath that, you should be trading for downside rejections, looking for a failure of that level, and moving into 119.15. That's the downside here out of Google, looking for rejections of 122.15. 122.15, something that does this. Speaking of 20s, it's 9:20 on the clock. Let's continue along here and just round out the core list, and then we'll sort of wrap it up at that. So here's the metaverse, just continuing to fail to get any acceptance into the overhead gap. Remember that this yellow zone in here, it's going to be difficult to show without the daily chart, but that represents a huge gap, right? Gap rules are in play out of the metaverse, so we are looking for this technically. Gap fill reversal, the intended open is going to be down here. So something that does this, attractive to the downside, or just flushing this support in the first place. Basically, 244.50 is already support from back here. If we just break that, 241 is the larger test. Now, on the daily time frame chart, on the hourly time frame chart even, a pullback to this level is not the worst thing in the world. It really isn't out of Meta, right? A 241 pullback is not the worst thing in the world for Meta. So watching 241 to see if we can get anything that looks like this, once again, broad market playing nicely, would be supremely helpful for that particular outcome. Next up is NVIDIA. NVIDIA's intended open. By the way, earnings, obviously, after the close today, implied volatility on the options chain is going to be pumped up through the roof. Not ideal if you're a directional options buyer. If you're a seller, of course, your risk is just the directional move out of earnings in the first place. But implied volatility will be pumped up. I'm just going to tell you right now, I won't be trading NVIDIA today. I'll trade it in the aftermath from earnings, but I don't plan on getting wrapped up in the implied volatility. Been hurt too many times, right? Hurt too many times trying to be a hero with that. Anyways, gap rules are technically in play. You can look for this if you'd like. Obviously, we're falling out of this ideal consolidation, that 311.50 level. From yesterday's session, there were some early attempts to get over and hold that. It couldn't stick, right? So 311.50, as long as we're underneath that, bearish outcomes for some pullback to unfold, 297. 297 is your key area of support. So gap fill reversal to this is probably that's the picture perfect textbook trade. Does it give it to us? Maybe, maybe not. Again, earnings on this one, anything goes. So take this with a grain of salt, really, out of NVIDIA. I think that there are much better setups in things like Tesla looks better to me. Google looks better to me, right? Netflix, not so much. I think that Tesla and Google probably take the cake in terms of tradable outcomes this morning so far, right? Here's Microsoft. Intended open, big gap down at the 313.50 level, right? So I'm not even going to draw in the intended open. We're opening basically right around in here. What does that mean? So gap rules are in play, and then your lower high just wants to be continued rejections if you're bearish under 316.50, and you're looking for support here, 313.50, right? Prior resistance turns into support where the rally stems from. Okay, obviously, if we do this on the open, breakdown under 313.50, lower highs go underneath and target 309. All right, so that's the downside. I think that, in my estimation, guys, this is a better way of looking at markets together for the pre-market. I mean, the hourly structure here, it's so clear. To me, it's so clear where the market should be finding inflection points, right? So I really do hope that this has been helpful switching to this view in this pre-market live stream, and will continue to do so as we go forward. The daily chart's great. Don't get me wrong. Daily chart is great. But if we're looking at day trades, right, I think it's worth understanding a little bit more of that nuance with the hourly. So anyhow, getting back to Amazon. I mean, again, look at what's going on here. This was the better trade on the Tuesday session, or excuse me, Monday session. What am I saying? Monday session here for the breakdown. But the same thing happened yesterday. Once again, we rejected 116.85. In the pre-market, Amazon's actually holding up okay. It's holding up okay. The intended open is to be smack in the midpoint of the prior day's range. So this clearly, right, if we're just remembering everything we just said about, hey, look, the inflection points should be clear on an hourly chart. If we're opening in the midpoint, do you want to do something until we get to either, do you want to do something here, or do you want to wait and be patient and do something at one of these levels, right? Clearly, you can see where the edge exists in Amazon, right? It's at 116.85 or 114.50, one or the other, all right? I would probably carry forward in Amazon, you want to do whatever the broad market does. Whatever the broad market does. If the broad market gives us a gap fill reversal and Amazon rallies out of the gates, you're looking for rejections off of 116.85. If Amazon is ripping in the upward direction and the broad market is falling off of a cliff, and let's say it's over 116.85, I would not be looking for this. I would not look to trade higher lows above. I would say, okay, let it do its thing. The better short will be when these things are in sync and perhaps at our next area of resistance. It's actually going to be shy of that this time around, under 119. 118.50s will be the level. But anyhow, that's a story for potentially tomorrow, depending on where and what happens. Look at this. Sharp rejection as I'm speaking to you. Look at this Amazon pre-market over here just sliding big time. Sliding big time in the last, 15, it wasn't even 15. It was like the last 30 seconds that we were just talking. But anyways, we've got 9:25 on the clock. I think we did some constructive things here in the pre-market session together. Let's take a look at the ES and just make sure that we don't need to reassess here. I would say no, for the most part, we do not have to reassess the ES. Most of what we've already done for analysis will still stand. Gap rules are on the table, looking for rejections here. Even further than that, still very skeptical over here for rejections. You can play the long side for the gap fill in the first place. If we, number one, fail the overnight low, meaning that there's no price acceptance under the overnight low, we're trading above that. And then number two, we're trading above the opening print, right? Above the opening print on the day's session, right? So this could be a long for a scalp in the upward direction. Do not overstay your welcome at the prior low of day. Do not overstay your welcome here at 41.60. All right, that is going to do it for today's pre-market prep. Thank you to the 1, 2, 3, 4, 5, 6 thank you messages from Chijox for you. Thank you for the 6 thank you messages. That's very cool. Come join us in the Discord. If you're not in there already, come hang out. We just chat markets, send some ideas every now and then, and hang out together. It's a good time. You can chat with like-minded traders, and that's going to do it. All right, so thank you to everybody for tuning in. Have a green trading day. Stay responsible out there. Use a stop loss. And with that, I'm going to wrap it up. I will see you in the next one.